Deep in the money options. So what are they? You've probably heard of them, and deep in the money options is a great way to profit with very little risk. Now, the only downside of a deep in the money option is you do have to spend a pretty good amount of money. So let me explain to you exactly what a deep in the money option is. If you know a lot about options, an option is you buy a contract and then you have the option to buy 100 shares of that underlying stock. So I'm going to use the S&P 500 ETF, the SPY. So let's say the SPY is trading at $250 a share. A deep in the money option will be an option that you can buy to purchase 100 shares of that stock. Now, usually when people think of options, they'll buy the options at around 250. They'll buy a 250 strike. That would probably be about $2.50 to $3 on a front end contract. But what you want to do with a deep in the money option is, let's say you want to buy a call, but you want to buy a call that's about 10% in the money. So if you look at a $250 price, you want to look at a contract that has a strike price of 225. So a strike price of 225 means you're going to be buying that contract. It's probably going to cost you around $12 to $15. Now, that's $12 to $15 price for the contract, but of course the actual cost is you multiply that by 100, so you're looking at $1,200 to $1,500 for the option to buy 100 shares of the SPY at 225. Now, the great thing about a deep in the money option is that you can make money if the stock doesn't move very much, or if it doesn't move more than 1% or 2%, you can still make money because that option is nowhere close to being out of the money. The only downside to a deep in the money option is that one is if the stock moves against you radically, like more than 10% in a month, you could lose a good portion of the money that you spend on that deep in the money option. And if that stock moves in your favor radically, let's say more than 10%, you don't profit as much as you could have if you bought an option that was more on the money or at the money. But the great thing about a deep in the money option is that it's a great conservative way to make a consistent profit. Because if, let's say, if the stock only moves up 0.5% or 1%, you can make a 5 to 10% return. So a deep in the money option is almost like a neutral strategy, in that you're going to make a better than average profit if the stock doesn't move very much. Now, a deep in the money option, you can buy a deep in the money call. You could also buy a deep in the money put. But I would recommend a deep in the money call better, because stocks tend to move higher, and stocks very rarely kind of move lower. And when they move lower very quickly. So a deep in the money put doesn't make much sense. But I do like deep in the money calls, especially when markets are flat or choppy. In the summer, markets are flat and choppy. So these sort of safe, almost neutral type strategies can really generate a consistent income every month. So if you're looking to profit, play a little conservatively, and you have a little money that you can put out every month, then I would definitely recommend a deep in the money option as a income generating strategy. So I hope you enjoyed this video. If you did, please be sure to like, share, and subscribe. Thanks. Bye.